again, no respite for Bitcoin. CPI inflation coming to the downside. We're getting a miss on the inflation figures, showing that it's still trending a little bit too hot. You can see the two headline figures missing the estimation slightly, but more importantly, the core figures did come in line, but is showing less of a fall to the downside. What does this mean for Bitcoin initially? Straight away, you can see Bitcoin getting rejected here on the hourly candles dollar index, moving powerfully to the upside as you would expect, with inflation still proving tricky to handle. We also had the FOMC minutes last night, which I'm going to give you a breakdown of the key headlines from that as well. Plus, we're going to look at the key levels in the Bitcoin chart. If you appreciate that, smash up the likes. Don't forget to subscribe if you want to trade in these moves. Ijaz.uk/Bybit, Ijaz.uk/BitGet. They're the two platforms I personally use to trade. Now, let's start off here with what is known as the US inflation rate, the headline inflation rate year over year, estimated to come in here at 3.6. It came in at 3.7, okay? So, again, slightly hotter by 0.1 than the markets expected. But more importantly, it shows that it's kind of just leveled off. There was no progress made between the August figure and the September figure, which is going to get the markets a little bit worried. Remember, the whole reason behind this is the US and the Fed in particular do not want entrenched inflation. What is entrenched inflation? Entrenched inflation is that nobody expected inflation to stay at 9, 8, 7%, right? It was common sense that as interest rates would increase, you would start to see inflation come down. And indeed, we have seen that. We've seen inflation here moving to the downside. The problem is, like we saw when Volcker years ago did a really fast rate hike, you ended up with entrenched inflation. And that risk could play out here for the current cycle as well. You do not want 3.5% of inflation, which is stuck. The Fed's mandate is to bring this down to 2%. And we know that they're going to stay restrictive. They're going to continue to hike and keep rates higher for longer until they get to that objective. And this is another month that's gone by with not us getting down to the levels we've seen before of 3 or 3.2, but stuck here at 3.7. If we look at the month-over-month figures, which is the run rate, right? It's the most recent data, just looking at September. That came in at 0.4. And the estimation for that was to come in at 0.3. Seems quite innocuous, right? Seems like it's not a big deal. Why are you worried about that? 0.3 to 0.4. 0.4% annualized is 4.8% run rate. If we carry on like the last month, inflating the prices as we did last month for the next 12 months ahead, we would be running at 4.8% inflation, which I'm sure everybody agrees is not the 2% that the Fed are after. So 0.3, which is what they're expecting annualized, is 3.6. So the differential in the run rate is about 3.6% annualized inflation to the 4.8. So it's quite steep there. And again, you know, the month before that being 0.6, this being 0.4, these are quite high levels and going to be a little bit worrying on the headline figures. Now, that being said, you can kind of, you know, say that a lot of this is due to the food and energy supplies, and therefore we look at the core figures, right? And the core figures did come in at expectations. Not better than expectations, but at expectations. For the year-over-year figures, they were expecting this to come in at 4.1 versus 4.3, and it did come in at 4.1. So markets will be okay about this, and that's why I'm not expecting too much of a bloodbath. We'll come onto the price point we'll come onto the price action shortly, but let's take a look at these numbers first. This is the main reason I'm not expecting a crazy bloodbath, is the core figures. When you look at the core figures, what Jerome Powell will be doing, he will always want to strip out the food and energy because that's really volatile, particularly, in this next reading for October as well. It's going to be even more volatile because of obviously the wars that are going on. So we'll have to keep an eye on this. So that's positive. 4.1, it came in at expectations. Again, it's still high, right? 4.1% year-over-year inflation is not low. It's not 2% that the Fed wants. So there's still work to be done. And then finally, if you look at the core month-over-month figures expected to come in at 0.3, it came in at 0.3. Some had expected this to come in at 0.2. So this is where the difference in how the market will move will be based on this. I saw some people expecting in the consensus that it was about 0.3. Others were pricing in 0.2. It came in at 0.3. So again, this is saying 3.6% annualized core inflation is the run rate we're running at today. Hold up, guys. If you're looking to actively trade and you're not in our free Telegram group, Ijaz.uk/TG, make sure you're in there. I share free trade alerts plus TA setups of exactly how I trade altcoins and profit successfully. Also, there is a VIP group where you get regular VIP trade alerts with the exact trades I'm taking. So definitely check that out. Ijaz.uk/TG. I'll see you on the inside. So with all that said, we then need to jump back in to say, okay, what is it the markets are pricing in? Because just before the CPI reading, this was as high as 92%. 92% of the market before the CPI data come out, I checked this just shortly before, had priced in that we're getting a pause. On November the 1st, which is just over 2 weeks from now, we're going to get a pause at the next FOMC meeting. The Fed won't hike, right? But now you're starting to see just this notch down a little bit. Will the two sets of data we've received, which was PPI yesterday, hot, and today, a slightly hot on the headline, but meeting of expectations on the core CPI, will that start to make people think that we might get 25 basis points? It's a difficult one, right? Obviously, we had the labor figures last week as well, showing a really hot labor market as well. So lots going on which the market has to digest. And of course, Jerome Powell will have to digest that as well. Now, to add on top of that, we also need to understand what happened in the FOMC minutes. So the FOMC minutes came out yesterday, and let's take a look at the key recap points of what they said. Remember, this was not a new meeting. This is the minutes from the previous meeting where they decided to pause. Uncertainty on further rate hikes, but consensus leaning towards one more. So we know that, right? We know in the summary of economic projections that the Fed had priced in at least one more rate hike for the rest of this year. When are they going to use it? That's the question. November or December? Rates will stay elevated until inflation reaches 2%. We know that. FOMC cautious, data dependent on future decisions. Some divergence within the committee. Yeah, we know that. We studied the dot plot. We know that there's some individuals that are a bit more hawkish and dovish. Inflation concerns persist with upside risks. Yep, we're seeing that still. Economy resilient, but not without risks. Since consumer spending continues, but tighter credit conditions and higher inflation poses challenges. Producer price index rises impacts Fed's 2% target. Yes, CPI data released today. Okay, so that's what we had from the FOMC minutes. And the markets, of course, saw that play out as well. Now, you're seeing the dollar index is continuing to remain strong, right? You can see here it's trying to regain its 4-hour EMA ribbon on the daily EMA ribbon. It's getting that bounce. This is exactly what we were speaking about, guys. If you've been following my content day after day, you will know this is exactly what we said would happen, was the dollar index just wants to cool off and retouch its EMA ribbon. And you can see it's trying its best to bounce here. So the dollar index is going to want to go and create a higher high. And if it does, that can spell more pain for Bitcoin. And that's exactly what we're seeing play out. Bitcoin has just lost its daily EMA ribbon yesterday, right? It lost it because the dollar index is bouncing from its EMA ribbon, which means Bitcoin will have to lose its to the downside. Remember, they're inversely correlated. And you can see here, Bitcoin is breaking a very important trend here to the downside. You can see this purple upward trend here. Bitcoin's breaking that trend here on the daily chart, right? And if you break that trend, what are the key levels of support you have? The key levels of support you have, first and foremost, is this first pivot point. Take that first pivot point. Remember, Beyonce is the best trader in the world. She says, look to the left, right? To the left is the pivot point, 26.2. That's the first level of support we can hope for here on Bitcoin. If we fail that level, if we're unable to bounce from here and show some strength here on Bitcoin, 25 at the bottom of the channel, 25K, yes, guys, is still in play. And you guys shouldn't be surprised about this. We've been talking about this. I've been, giving you guys bearish headlines and people complaining about it in the comments. When I say stuff, there's a reason I say stuff. I don't say stuff from emotions. I say stuff from data, right? And the data suggested we bounced from a neckline, just like we came down here, we bounced, we came here, we bounced, but we showed very little strength on this bounce. You saw this big doji candle here as well. If you guys aren't recognizing this stuff, if you're not spotting the patterns, if you cannot tell, for example, that's a doji candle, you're really behind on your trading and you're not giving yourself the best advantage to buy effectively, to trade effectively, and to invest effectively. So check out ijaz.uk/TA. I put my 10 years of experience into one structured curriculum where you could learn everything to do with TA. You don't have to guess. You don't have to listen to these YouTubers who all became TA guys overnight. I actually did this for a living at an investment bank, and you guys can take advantage of that. Okay? So what I'm seeing here is a head and shoulders pattern playing out. Left shoulder, here's your head, and your right head forming. So if we do fall to the neckline of 26.2 and we lose that, we could be in for some even more pain, guys. And that pain, if I show you the measured move, you're not going to like it. You guys will not like this measured move because you'd have to take it all the way from the highest point, all the way down to the neckline, apply it to the point of breakout. Again, guys, you will learn all of this in the TA course, so you should be doing this like a whiz. And this will bring you down to 20,000. Very, very scary. Now, I'm not going to shout out any lower numbers like that. I know some people, whenever Bitcoin's kind of having a wobble, like to shout out scary price points like, oh, we're heading to 15, we're heading to 12, we're heading to 0 on Bitcoin. Let's just follow the data we have. And the data we have is support is here at 26.2. If we fail that and we start breaking down 25 and lower, we do play out this head and shoulders pattern, that has a price target of 20. Now, of course, we're not just going to head straight down to 20. There's various horizontal levels of support playing out throughout, including 22, which is a very important level of support, as is 24. So we have to take it step by step as we see this breaking down. But just to let you guys know, the structure of the chart is not super bullish. Anybody telling you that this is a super bullish setup right now, it's not. It's weak. We got rejected from 31.32 here, rejected again from 31.32, bounce this time, showed weakness early. Of course, there are geopolitical concerns adding to that as well, but also the inflation situation is continuing to play out as well. So we're seeing weakness here in the charts. And so if I bring out the EMA ribbon on the weekly, the other thing you're going to notice is we're 3 days away from closing this candle. And in 3 days' time, if we close at the kind of levels we are at, just close here, just below this EMA ribbon, it's not going to be great. We're going to lose that EMA ribbon after just 2 weeks of having it, and it won't be great. We would have achieved our EMA ribbon, broke above it, doji candle, which is a bearish sign of reversal, and then dumped it all back again, back below our EMA ribbon. So we do not want that. So we got 3 days to kind of pump our way out of this situation. But that being said, we still have stuff coming out, right? We still have tomorrow Michigan sentiment surveys. We need to look out for that. If we take a look at the traditional markets, let's see how they're responding to this inflation data, which has literally just come out. Let's take a look here at the pre-market. And yeah, mixed bag. NASDAQ flat, S&P flat, Dow Jones flat. But one thing is for sure, dollar index is climbing to the upside on this news, and that always spells a little bit of pain here for Bitcoin. So my game plan, like it has been for a few days now, is I'm waiting for these pullbacks. Bitcoin does not look like it's ready to go and surge and create a higher high above 32, right? But that being said, I'm not going to try time it. I'm not one of these guys that says, oh, I'm this perfect guy who can time this market. No, right? When I'm in the market, I'm firmly in the market. And right now, I'm in the market. I've got a little bit of cash on sidelines. If we fall down to some of those support levels, I'll be nibbling. Not at 26.2. I don't think that's a nice enough price point for me. I want to see that 25 level. If we get 25, and particularly as we get close to 25, like 25.3, 25.4, I'll start doing my nibbles. If we break down below 25, then that head and shoulders pattern is playing out, and we could be in for an even bigger pullback. But the battle against inflation continues. For those who thought, oh, it's done, the game is over, we're finished, we're going to start cutting rates soon, it's a little bit more complicated than that. We've got about 4% of inflation, which so far is proving tricky to bring down. What is Jerome Powell and the Fed going to do? It's going to be over to them at the next FOMC meeting. As always, guys, if you appreciate this type of content, as and when the data comes out, don't forget to smash all the likes. Don't forget to share this with somebody who will benefit from this knowledge. Go watch this video here, and I'll see you in the next one.